finding your seat, we'll kick it off with our first panel of the forum. This one is Views from the C-Suite, Opportunities and Challenges for the Road Ahead, which will be moderated by Madam President, Director Lindley-Myers, and she will be joined by Shannon Lowry Bender, Executive Vice President and Group General Counsel, RenaissanceRe, Andrew McMahon, CEO and President, the Guardian Life Insurance Company of America, and a familiar face here at the NAIC, Julie McPeak, Senior Vice President, General Counsel, Insurance, USAA. So please welcome our first panel.
At this first panel of the forum, we have the good pleasure to kick off what I know will be an engaging and thoughtful 2 days of discussion. I'm going to ask some hard-hitting questions of Julie McPeak, and I'll soften it as we get to Andrew and Shannon. But seriously, Julie, Andrew, and Shannon represents different parts of the insurance sector, and we'll certainly approach our discussion from the vantage point of their own diverse backgrounds. I look forward to picking your brains on all of these topics as we get going this morning. We're going to be talking about climate, innovation, and technology, as well as the changing demographics, to just name a few. As Commissioner Anderson has mentioned, we will have some time at the end for questions from the audience, so make sure that you have your Slido app open on your phones. The event code and password are right up behind me, and so please don't be shy. With that, we'll get started. And I guess I will start with, I'm going to have them try to figure out who I'm going to start with. Shannon. Shannon, I'm going to open it up by just basically saying that you all have been immersed in the insurance industry for quite a while in different capacities. And so I want you to kind of give us an idea of how you've seen the sector change over the years, both in the insurer side and the regulatory side, and how the priorities are different. And so are the consumer expectations. So sort of give us how those items have shifted for you, Shannon.
Sure. So thanks again for having us here today. I'm Shannon Bender. I'm with RenaissanceRe. We are a Bermuda-based reinsurer celebrating our 30th anniversary, along with the Association of Bermuda Insurers and Reinsurers that is also celebrating its 30th anniversary this year. RenaissanceRe was founded right after Hurricane Andrew in the 90s, and we've been around for a long time. I didn't start my legal career in the insurance industry. I started it in restructuring and banking, which these days is sort of the same thing. I also did a lot of corporate governance and M&A work, and so I went from Wall Street in New York to Front Street in Bermuda. And for those of you who've not been to our lovely island, you should come. I think at RenaissanceRe, we're a major international P&C reinsurer, and we have a significant availability of third-party capital that we manage. And so to answer your question, I think over the last several years, what we've seen is how best to take the availability of capital and match it to the right aspect of risk to fill the protection gap. From a regulatory standpoint, with the volatility in the industry over the past several years, I think that there's been a little bit of uncomfortable nature between what is the economic value of risk and then the insured losses. And I think managing the availability of capital to help bridge that gap is something that we strive to do at RenaissanceRe. I think that it's been a shift from affordability to accessibility.
Mm-hmm.
Sure, so thank you for having me here today. So I'm Andrew McMahon, CEO of Guardian Life. Guardian, for those of you that don't know, may know or not, 163-year-old company, so while I appreciate that 30 years is old, 163-year-old life company is quite up there. So I think over time, to your question, Director, the shift that we have seen in particular, we're serving individuals on an individual business side and then the group side, mostly smaller businesses throughout the United States. Our operations have a lot of back office operations around the world, but serve primarily United States citizens. And that, what we've seen is shift over time, and particularly accelerated in the last couple of years with the pandemic, is consumers really looking for a different experience in conducting business with either an agent and on the group side. And that's much more digitally enabled, that's much more self-service enabled on service side, that's much more engaging for a policyholder, as opposed to maybe the past that many of us have seen in witnesses where policies were sold, put in the top desk drawer, and never accessed. They're looking for more engagement and where to get the value. And I think that's the biggest thing that we've seen, and particularly, I think that's over the last several years, but really accelerated in the last 3.
Julie?
Thank you, Director. And let me also express my appreciation for the invitation to participate today in this event and also as part of this esteemed panel. So thank you very much. I certainly come to USAA from a long regulatory career, and the public service aspect of being an insurance regulator fits the mission of USAA very well. We are a 100-year-old full-service financial institution, so we have a bank, property and casualty companies, and also a life company. And my position is actually focused on the P&C and the life companies. I try to stay away from the bank, although it's very difficult to do these days, particularly in the economic environment. I will have to agree with Andrew that what I have noticed recently in the differing consumer expectations are the different channels and the access that the consumers are trying to reach out to insurers. We are direct to consumer. We spend a lot of time with our member service representatives, and we like to have a very open, caring, conversational relationship with our members. But what we have found is our members don't have time to always talk to us like they did in the past. They want to reach us through our .com. They want to reach us through our app, and we have to be able to provide that same level of service and empathy, whatever channel our consumers are reaching us through. I will say, too, being an observer out of the regulatory space for about 4 years now, I would also point out that the regulatory and environmental focus on data and AI and predictive models is also a change, even at the NAIC and the individual state level. So we're seeing a lot of requests for information, data calls, in addition to the models that are drafted at the NAIC side. And the last thing I would say is another point that I've noticed recently is certainly the need for talent in the insurance industry, and the NAIC can certainly be commended for its work individually and through its foundation to increase the talent pool, because part of our 100-year-old insurer is we have a tremendous number of people that are eligible for retirement soon, and I think that that was also the case with a lot of state insurance departments, and the need for talented individuals to come into the insurance industry is so great that I think that's something that has been recently addressed by the NAIC, and we're proud to be a part of.
Wonderful. I'm going to stay with you, Julie. We have a whole panel dedicated to innovation and technology tomorrow morning, but I'm hoping to get your perspective on this as well, since it's such a driver right now in the industry as to how companies are approaching not only the underwriting, but their claims, marketing, customer communication, and more. Just like you were saying before, you were talking to them. Now they're wanting to reach you through the .com. So I'm going to ask, where has USAA found the use of AI and other new technologies most transformative?
Well, at USAA, we have been very intentional to explore AI and predictive models where we think it provides a better customer experience. One example is in some of our claims, particularly around catastrophic events. We can use AI and some modeling to help adjust losses even before our members are allowed back into the areas of a wildfire or a hurricane, because we can use information that we can gain as to the condition of the property so that we can adjust those claims more quickly. So it's always very important for us to use these tools to the benefit of the consumer. And Again, we recognize that some consumers will still need to have that member touch area and will need to reach out to our member services representative for that personal individual care, and we are going to maintain that channel.
So you don't feel necessarily that AI has supplanted the traditional approach?
Absolutely not. We are using it certainly complementary and still relying on our personal touch through our member services representatives.
Thank you. Andrew?
So for me, this is technology is quite a passion of mine, and I think so. For those of you, I have a computer science degree undergrad from 1989. I know you're all thinking now he can't actually be that old, but I am. But if you look back, the interesting thing is I think the acceleration of technology in not only our industry but all industries right now is fueled by the precipitous drop in cost of both storage and processing power of computers. And if you look, 1990, I picked up the data on this morning, 1990, in order to store 1 terabyte of data, any kind of data, which our industry is riddled with tons and tons of data, 1 terabyte of data to store was $3.27 million in 1990. So the year after I graduated a computer science degree, $3.27 million. To store 1 terabyte, that's on disk storage, to store 1 terabyte of data today, it's $14.30. So that drop over those, if you see that processing power also of how many MIPS how many things I could process millions per second, that same cost curve is actually on processing power also. So it's for that reason that AI and some of these things that are really moving rapidly now, and that curve continues to go down and probably go down asymptotic to zero at some point, it's going to keep consumers, again, in every industry, just keep moving forward. And I think, as I said earlier, we see consumers really looking for what I call a much more contemporary experience with an insurer. That contemporary experience has to do with certain things. Can we anticipate their needs? Are the products anticipating their needs? Can we underwrite in a much more, in the life insurance side, right? Things without yuck factors involved, which bloods and fluids we call yuck factors. And how do we start to use electronic data, electronic medical records, and other signal-bearing data sources to do 2 things. One, reduce the cost, which is critical, the cost of administering these products, delivering the products, serving the products going forward, but then also, and that reduced cost will also help us then access communities that aren't being accessed today. And those technologies should also help us access those. Now, clearly there's an underlying challenges and issues with this, and I think that's where the partnership between the regulatory bodies that we all have and work with and the companies really come to, we're going to have to lock arm in arm here and moving forward for that transparency, understanding, and where this is going. And my view is, look, this is moving fast, and most of my comments are from ChatGPT also, by the way. I'm kidding. But ChatGPT, if we just look at ChatGPT, I will point out, it was introduced November 30th of last year. It is now being all over the place with people doing lots of different case studies. I'm not saying necessarily our industry, but all over using ChatGPT. And the number of iterations and versions of ChatGPT just coming out in the next 6 months, and that power in the next 6 months is actually transformative of what it even is today. And if you look at just in December, so we're not talking, this isn't years and decades away when we started talking about big data in 2010-9. This is 6 months from now. This is 9 months from now. And consumers, and I think the marketplace will continue to push us all as an industry on all these fronts.
Great. I'm going to come to you, Shannon, and ask you if you could share how RenaissanceRe is utilizing technology in its operations.
So technology was at the forefront of RenaissanceRe when we were founded. I think we were founded with a bunch of computer science majors that loved to pick apart third-party models and figure out where the weaknesses lie and where the strengths lie. And I think that that's what we continue to do today. We develop what we call our own proprietary view of risk. We have a dedicated team of risk sciences and mathematicians that are constantly looking at, as much as 4 times a day, weather inputs and forecasting models for the property catastrophe line of the business. And they again, with the developments of some of the technology, the speed at which this stuff can be processed and provided to our underwriters on a global basis is part of what we call our integrated system. Everyone globally can get the information that comes from our risk science teams and our modelers and use it for more faster and efficient processing and viewing risk and writing deals. And that's what I think is just really, it's exciting. It is a passion project at RenRe for a lot of our team, and I think it's going to be really exciting in the future. I think that one of the other things is, you know, data in our business is key, whether it's consumer data or forecasting data or impact data. And I think it's key. And, you know, it's a big business. Risk is our business, and understanding the data is key to understanding the risk. We own major risks as reinsurers. And for instance, in Bermuda alone, we probably have, not necessarily RenRe, but all the companies in Bermuda, about 25% of the losses associated with Hurricane Ian, and that could be $13 billion. So you have to understand that when you're getting into it, and I think technology creates a better understanding of it, which can only mean better pricing of it, which gets to availability and hopefully lower cost.
All right. So what I'm going to do is sort of weave in, moving a little bit away from the technological area, but kind of keeping in as well, not just in the insurance sector. Cyber threats are top of mind for all executives, and certainly us in the regulatory community, regarding the company's risk management strategies. And I'll start with you, Julie, and come back this way. Do you see any blind spots, either on the regulatory side? There aren't any, I'll just tell you that. Or on the insurer side.
I'm not going to say that there are.
No, seriously, on the regulatory side or on the insurer side, and how cyber risk is addressed, and what solutions do you see going forward?
Well, I actually, all jokes aside, I wouldn't say that there are any misses or gaps on the regulatory side. And I would say even from the industry perspective, the product and the availability has certainly matured to the place where I think cyber is a much more common and frequently purchased coverage. Where I think the gap exists is on the business owner's awareness of the importance of cyber risk and protecting cyber vulnerabilities, particularly from a small business perspective, because we do have a small commercial arm for small businesses, and helping those business owners understand the risk and the cost and benefit analysis of protecting that risk is where I see a little bit of opportunity for all of us. And then also following up with some of those small business owners to build in more of a resilient system. So healthy governance around information security and protecting the data that they have and are safeguarding on behalf of their own consumers.
Andrew, your thoughts?
Yeah, so cyber, that is, you know, I would say my board at Guardian asks me every board meeting, hey, what are the things that keep you up at night? And so cyber is one of them. And I think because even the way you've worded the question with blind spots, you know, inherently you can't really see blind spots. So I do worry, there's nothing, the one thing that in this country is the biggest gap for us is there's currently 750,000 open cyber jobs in the United States. So like I've told my kids who are in their 20s, like, hey, if you ever think about another career, you might want to go in cybersecurity. So 750,000 open jobs in the United States. I think that, and if you look at China has the ratio of Chinese-based hackers relative to FBI security people, it's 50-to-1 ratio. So as we look at this threat, it's a threat not only to each of our companies, but it is a threat to the entire economy, to the country, and it's something that we all should be addressing in one way or another. With that, I think we have to address that skill gap. and that skill gap that the talent just doesn't exist, and training up more people on cyber and deploying them within these companies. I do think for Guardian, which we feel good, again, knock on wood on lots of this, but we're looking very hard at secondary cyber risk for some of our partners and tertiary cyber risk beyond that. And I think that is more difficult even to reach all the way out to assess that. But we serve lots of small businesses. We get lots of requests on, hey, could you help me with the cyber stuff since you have a giant program on cyber protection, including our general agency system and all those general agencies that run. And so where we can extend the leverage there, we are. But I think that, the secondary and tertiary risks are one that may be a blind spot for some.
Shannon?
So I think I agree with what they've said, and I think that for those of you that do not have a cyber playbook or have not gone through a tabletop exercise, you're a couple years behind, and you should. I think that our organization runs one of those every few years, and it's just constantly updating. There are experts out there that do a fabulous job at managing things, and it's a real learning experience. And I think with every iteration of such an exercise, we learn a little bit more about ourselves and how we could withstand certain attacks, and we learn a little bit more about our management team and how they would respond to such attacks. I think that it will be constant. The threat actors are not going away. I think that the coverage area is starting to improve because there's more and more dialogue and there's more and more conversations taking place with clients and customers about what is and what is not covered. And so again, the knowledge of, and I actually purchase our insurance for RenaissanceRe, and so when I sit down and look at what's covered, what's not covered, and the expense associated with both, I've seen my premiums double, and the exclusions get longer, so I'm not really sure what I'm paying for.
Yep.
But it is a big education, and I think for leaders in the organizations, you really need to get smart on this.
Yeah, and I'll just build on that. The tabletop exercises are key, and we've found lots of benefits of doing that within the team. The last one we did was just recently, the end of last year. The almost end of the tabletop exercise then started our board meeting, and we brought it right into the board. And that exercise for us was really helpful both to the board and the management team to start to get clarification of when things go to the board, where management, and how this all interacts, including regulators involved and so forth. And how do we bring them in, when, how early, and so forth. And so I think that really gets everybody, where we have the playbook that lays all of it out, it gets everybody's muscle memory that when, God forbid, when these things do happen to our companies, which will, that it's well-oiled machine.
Mm-hmm. I'm going to move to another topic, and I'm going to start with you, Shannon. I know that when you're looking at RenRe originated as DE&I initiatives at the executive level, underscoring how important diversity, equity, inclusion, and belonging is to the culture of the company. Can you give us an approach, how the approach at RenRe has progressed, and where you came from and where you are now?
Yes, so I think at RenRe, we constantly consider something we call our North Star, which is in a lot of our logos until our 30th anniversary logo came, but in all of our signature lines for our emails, et cetera, which is seeking diversity, creating equity, and practicing inclusion. And that's at the fundamental heart of everything we do. We have a DEI Council globally, and our chief portfolio officer is the one that leads that up. And he is part of our governance committee. There are 6 of us that are the most senior managers of the company, and that's how important it is that one of the most senior people in the company runs our DEI Council. We have a goal that's embedded in every leader in the company. Every senior leader has a goal about DEI, and then every employee has a DEI goal. And as part of the performance management process every year during reviews and evaluations, Employees and managers have to, with specificity, talk about the importance and what they've learned over the year through participating in our DEI events. And so again, it's embedded in the DNA of RenRe, and it's something we do on a day-to-day basis. We think this effort has really shown both qualitative and quantitative results. We've done pulse surveys, and I think our employee population with over 80% results have said that they have become more aware of DEI issues and perspectives, that they feel like they work for an environment where there is greater acceptance of differences. And also one of the great things is that our population of senior women in the uppermost echelons of the company has really sort of doubled. We went from, I think, 19% women in 2017, let me get these statistics right, to 27% in 2022. And so that's like from 19 to 32 women or something like that. So in the senior leadership within the organization, this is like SVP level and above. So the effort really pays off, and it's a short amount of time. And so I think that it's something that we've really strived to achieve, and we're doing really well. We report these goals obviously to the board and the achievements to the board, and so that's another level of where it's important, and the importance and the significance of it at the board level shows how meaningful it is to us.
Andrew, tell us about Guardian.
Yes, so as I mentioned, Guardian's a 163-year-old mutual company founded in New York. It was founded by immigrants in order to serve underserved immigrant populations with life insurance where they couldn't get it. And in that situation where there was lots of premature deaths in families, it was helped to protect those families. So the diversity inclusion piece for Guardian's kind of been at the core of the founding of the company, which we reflect back on quite often. Here, we introduced a couple years ago a program called JEDI, Justice, Equity, Diversity, and Inclusion. It's a program, it's a certificate program internal to Guardian that has 4 pillars to it. The pillars in around the themes of justice, equity, diversity, and inclusion. In those 4 pillars, it's first colleague, all the people that work at Guardian. It's second consumer. It's third community, and then the underpinning of it is culture. And how do we build a ecosystem and culture around that embraces diversity, equity, and inclusion around the whole entire company? And that should extend beyond just what we're doing inside. It should extend to the consumers. It should extend to the communities that we're serving. And so right now we've had over 1,000 people go through the certification program. We're revising some of it right now to make it a little bit easier because it was pretty laborious and challenging to get more people through it. And so that's our aspiration in the program that we put in place.
Julie, for USAA?
Yes, certainly. On behalf of USAA, we think it is both an honor and a privilege to serve the United States military community and their families. And we think that we need to mirror the diversity that we see in the military, which is, and some research would indicate about 43% of our U.S. military would identify as being an ethnic minority. At USAA, we have roughly 47% of our employees identify as being a person of color. So we try to include everyone in all levels of management and contribution at USAA. We also have an executive council that is extremely diverse and mostly from internal to the company. So you can see yourself on the executive council someday if you're starting in our member services call center, for example, or as an insurance adjuster. You can see a path through the leadership all the way to the executive management. We also have several diversity business groups that are employee-led, and they're in every one of our locations. They're extremely active, and they're inclusive not only for people who want to participate, very active and able to comply for some time. So, it really is a concern, and the closer that we can get to
I want to make sure everybody heard Julie's response in the back of the room first. Did everybody hear Julie in the back? Okay. I think it's, you know, I've been around several companies, either on boards and or executive roles, and what I've witnessed, very different, I would say, relationships and the dynamics between companies and regulators. And frankly, it's two ways, both inside the company, but then the regulator back. And I think for me, some cultures have been much more like the regulator is here to give a gotcha, and other cultures are like, no, the regulator is here to for us to work with them so that we can come up with the best answer. And I think that understanding that it is all around coming up with the best answer. And I've never been in any insurance company or reinsurer, for that matter, any discussion where there's anything like somebody like, oh, I don't want to pay a claim. I don't, and yes, they want to pay appropriate, correct claims and as fast as possible, but not pay claims. So I think that relationship and bonding can be more proactive in certain areas. I feel very privileged to be a guardian. The relationship that we have with the New York DFS is terrific, but I think there's still. And I think for encouragement to everybody is to just put those cards on the tables with entities that you're regulating about, hey, we want to do the right thing. All these companies around to do the right thing here, and how do we get to that answer, and what's the really underpinning of concerns and this and that. So that's.
Shannon.
So I think as a global reinsurer, we not only have the 50 states, but we also have several international jurisdictions. Our primary regulator, the BMA, is here today, and we enjoy a great relationship with them because they are smart. They know the industry well. They hire extremely talented individuals, and to your point, they are available to have discussions to help solve problems. They have an appropriate view of risk, and they try to match the two. And they have a good understanding because most of the Bermuda-based companies do have a global presence. And so they have a view of how many different jurisdictions we are filing reports in and calculating risk models and regulatory capital models, things. The other thing they do, which is amazing, is they organize all of our regulators on a global basis to hold a college. And so once a year, the other regulatory regimes submit questions to them, they organize them, they deduplicate them, and we do sort of a regulatory college where we make one presentation to all the regulators that's led by the BMA. And I think that again, it's a big effort on their part. We appreciate it. But it just shows that a well-run organization, an appropriate view of risk from the regulatory perspective, but also recognizing that running a business takes time. So organizing that effort. So it's sort of one day you block aside, you spend time with the people, you answer the questions, and it promotes a very good relationship between the regulators and the companies of Bermuda.
I'm going to switch, I'm going to go away from the questions for a minute and switch to climate risk and resilience, which remains one of the NAIC's major focal points during this year, and certainly in the last few years. We view this holistically and as encompassing catastrophic protection gaps, flood insurance availability and sustainability, mitigation efforts, consumer education capacity, climate risk disclosures, just to name a few. So I'm going to go to Andrew first, because I'm curious as to how Guardian, as a life insurer, has decided to approach the various aspects of climate risk and what types of disclosures you might have and investment risk as a major focus of how you're doing business at Guardian.
So climate is also close to our heart at Guardian because when Hurricane Sandy hit New York, it closed our headquarters down and displaced over 1,000 of our colleagues from downtown New York for more than 9 months. That sent us, thankfully, not in a tailspin, but in sort of a panic. And frankly, that also prepared us for the pandemic that then came, because we very quickly went remote, we very quickly went hybrid. We adopted some of these same practices that many of our companies and all your departments had to adopt during the pandemic. We saw downtown New York get flooded. The entire basement of our building was flooded, which you may say, well, the basement's flooded, big deal. Well, it happened, all the mechanicals of the building were in the basement of it, which included HVAC, elevators, everything. And by the time they could pump it out and get everything out, then mold and mildew and everything else, which I'm sure RenaissanceRe covered somehow, went through the entire building. So this has been something very close to us, having been affected by a climate event. So we've adopted since then not only resiliency practices of looking at guarding our footprint and where we're working and how we're working, but then also from an investment side of putting in very appropriate balancing investments on looking at climate and obviously other ESG type aspects also.
I'll go to you, Julie.
Oh, thank you. Well, certainly at USAA we have a high number of members and retired military in some higher risk areas for catastrophe. So, California, Texas, Florida. So we are very much focused on resilience, fortified homes. I know I saw a question about our wildfire mitigation discount in California. We want our members to understand how to prevent a loss, if at all possible. And that will include, even where it is allowed, reaching out to members prior to an event that, a hurricane is coming. Please take preparations now. A wildfire is in your area. Please be aware. If the regulators allow, we will contract with entities to come out to the house and spray flame retardant on your house if you're in the path of an approaching wildfire. We feel very much responsible in partnering with our members to protect against some of these more catastrophic losses. We also firmly believe that we need to address the communities where we all work and live. And so we are committed also at USAA to have LEED certified buildings in our major campuses in San Antonio and Tampa, Phoenix, and Colorado Springs. We do use recycled water for landscaping and have done that all the way back to 2004, water being a significant issue in a lot of our states. So we really want to partner to help reduce the risk of loss with our members through some of these climate risks.
Shannon, since you had to cover all of these.
We look to you.
Well, again, I think RenaissanceRe, again, since its founding, has been highly involved in trying to understand the property catastrophe business and not only the impacts of a catastrophe, but also how to prevent it. And so again, we have a dedicated team of risk sciences that study models and forecasts and, Farmer's Almanac, any inputs and all inputs to try to predict what the impact on things such as the formation of a hurricane or foundations, buildings, and also try to have education sessions. We have risk forums where we gather not only regulators, but governmental entities and insurance companies, where we teach things, we have sessions about how to protect communities against things such as a wildfire or hurricane formation. And I think one of our biggest sort of passions is trying to understand what the risk could possibly be and then try to prevent or minimize it by encouraging, again, some of the things that Julie was talking about, not creating dense populations near flood zones, using smarter building materials, and the like.
And Director, if I might add,
Sure.
I realized I didn't actually answer the question that came up through Slido, and that was, is there any opportunity to increase the wildfire mitigation discount? And actually, I would say at this point, we still need some work on the rate environment in California before we would consider bumping up that discount at this point. We certainly love to write insurance, and we love to write insurance for all of our members, but we like healthy competitive markets, and so we like all of you to write insurance in those markets as well, because we do also focus on the concentration risk in some of these more high-risk areas.
Did you have a follow-up, Andrew, on that issue?
I did not.
Oh, okay.
No, sorry.
Because I didn't want to cut you off, but I do think that one of the questions that was there was with all the technological things we were talking about, if technology has, I'll read it question, if technology has created more efficiency at a much lower cost, why hasn't the industry expense ratio gone down to reduce the cost to consumers? So I will start with you, Andrew, go to Julie, and then to Shannon.
Yeah, so that's a great question, and I think part of it has been driven by being a 163-year-old company. We are sitting on a giant legacy technology stack that continues to actually cost a lot of money. We have, as many of you may know, we have some systems in place, as the industry does, called Life 70, that was written in the 60s, and it was futuristic thinking it was going to be, really state-of-the-art 70s. Those systems, in order to move large blocks, and again, our contracts sit on our books, for decades and decades and decades, it's a lot of cost, one, to run those, it's a lot of cost to convert them to new systems, so there's been a balancing act of trying to maintain costs right now as we continue to make technology more contemporary, with the hopes that in the near future that we could start to really generate more of the efficiency and savings.
I will add, we are focused on reducing expense ratios practically every day at USAA. We don't want to pass on costs to our members directly, and that's how we look at our own expense ratios. So we have a tremendous focus on that. But I will say, much like Andrew, we are going through modernization, both of our tech stack and then our policy administration systems at USAA. So we haven't really recouped the cost of some of that technology gain yet. The other thing I would say to that is, we are watching very, very closely several of the insurtechs, who think that they can add efficiency in the acquisition or the underwriting or the rating on all of our products, on the life and the property and casualty side. We haven't really seen anything yet that has been revolutionary or that we would want to adopt. We're certainly watching and observing very, very closely. But I think when those factors can be affected by technology most rapidly, that's where you'll see the largest jump in expense ratio to the benefit of the consumers.
Shannon?
So I think like with most things, technology spends are a big portion of people's budgets, and having that information available and then work its way through the system and end up in price to the customer takes a while. It's not instant. You can't spend $30 million on a new computer system and then have it show up next year in savings. So it takes a while. That being said, I think the technology advances are great, and with the technology comes more data, and this sort of gets us back to the beginning of the conversation. But I think with more data, there becomes more awareness, and the more awareness and data and education companies can have, the better understood the risk. And again, when you understand the risk and the capital that's available these days, in the reinsurance sector specifically, the more you understand the risk, the more you can price it and knowingly go into the risk. And we provide the availability there at various levels for people that understand the risk. And then at that point, the direct insurers have more opportunities to provide coverage. And so I think it does take a while, and it's sort of a trickle-down mechanism, but it is there. And I think we've all seen from Florida, and that's my home state, so not picking on Florida, but the social inflation has also contributed to the high costs, and a lot of that is, you can blame the lawyers, I'm a lawyer, you could attribute it, but it's not just lawyers, it's also, again, getting back to population density in areas that never meant to have that many people living there. Water views are nice until the water's above your head.
Yeah, yeah. Another question that was asked is, in relation to consumer benefits, how has access to new and innovative insurance products shaped the way in which you do business, Andrew?
So access to innovative insurance products. So one trend that we've seen and we've been embracing is towards overall wellness, which is aligned with obviously our policyholders from a life and disability, so forth side. So we've also seen that in many younger population about other types of products that the traditional whole life product may not suit their needs. So with that, we've introduced a few different products. One on mental wellness with a partnership with Spring Health, and that's helping people get mental help, which we've seen a great uptake in. Secondly, we've created a product recently called Safeguard 360, which is a combination product of life insurance, disability insurance, and long-term care in one chassis. So one application, one underwriting process, but with the ability for people to leverage those three aspects to it. And the last piece is on the group side. We've seen people interested in products around critical illness, particularly around infertility and BRCA1 and 2 gene mutations. And so we've created some products there and pieces of products in critical illness product to actually cover some of those treatments also, which we think are meeting new consumers' needs and perspectives. So,
Julie?
Well, I would say, much like Andrew, we are looking at the needs of our consumers and developing innovative products to address those needs. One thing that we noticed is that, particularly for our currently serving population, they're thinking about life insurance as they're about to be deployed. And they have about 15 minutes to get all of the aspects of their life together before they PCS across the globe. And those are often very young people, and they're thinking, I should just do something to protect my family, just in case. So we created an essential term, a life insurance product that's available for people who are on the younger side of our population, like 25 to 39. There's a simple, direct, 9-question, I believe, underwriting process. There's a $100,000 face policy that starts at like $15 a month or something like that. But it gives an opportunity for particularly those currently serving or those younger members of USAA to, again, address that potential life insurance need at the moment that it's hitting them, and that we can provide a product to them very, very quickly that meets that need in that moment. So that's a product that we're really very proud of. We're also trying to, again, get to efficiency in underwriting and what sort of sources are available for information to stop the yuck factor that Andrew described in any kind of medical exam or any kind of a blood draw that might be required for life insurance, and looking at electronic health records for accelerated underwriting so that, again, we can get the product to the consumer in their moment of interest and need, and as quickly and as appropriately priced as possible.
Did you have a comment on that, Shannon? If not, I'll move to the next question.
You can move on because we don't face consumers too much directly.
That's what I figured. That's right. Okay, so the next question is there a cyber gap in policy wording? And you mentioned about all the exclusions, but is there a cyber gap in policy wording that was drafted before cyber was contemplated as a risk? Do you think that that's an issue?
Well, I think that most of the policies go from year to year, so I think the wording has evolved. I think it's gotten to a good place. There's a lot of discussion over it, especially at the last renewals and the upcoming renewals, but I think those conversations are healthy and good ones, because with conversations and without just stale wordings, but with conversation around wordings and exclusions comes an understanding of what is and is not covered, and I think that is a healthy way to be.
Julie?
I would agree with that. I do feel like from the industry perspective, the policy language has evolved to meet the needs. So I don't see a large gap in the policy language at this point.
Andrew?
Yeah, no, I'll just echo Shannon's point. We as a life insurance company use cyber policies. We've seen the premiums go up dramatically. We have appreciated the fact that there's a lot more due diligence now on the cyber risk programs. And as robust the programs are, the benefits back to the premiums that we're paying. And the language side, I don't necessarily have an opinion on.
Okay. The next question is, will the increased demand for talent in the industry further drive demand for AI integration? And I'll start with the computer man from 1989.
So, interestingly, if I think somebody's from Google is here, right? Is there someone from Google here? Google last week announced a certificate program on cybersecurity, if anybody saw it in the paper. And it's an interesting program. So you get a certificate. You don't have to work at Google. You sign up. I think it's $300. It's a 6-month course, 7 hours a week you dedicate to it. It's all online. And at the end of it, you get certified in cybersecurity, which is a great skill-based focused need to develop some talent here. The interesting thing is the AI that's going on behind the scenes, as you can imagine, and the help that they're providing people who are trying to get the certificate at the end on both resume writing, job openings, as well as recruiting to Google. So as they use AI to actually look at each keystroke, how you answered the questions, how fast you answered them, did you go back and change your answers, they are probably be able to categorize every single talent that is going through this curriculum that they've developed. I thought of that, when I read that and thought of that, I'm like, we could be doing some of that also when it comes to underwriting, disabilities claims. With disability claims is such an intensive, difficult role. And to some of those jobs that I think, again, are much more skills-based, emotionally based, on empathy and so forth, profiles that we can probably as an industry get better at, both attracting and then developing, and then also supporting some of that talent. We had, and particularly during COVID, as many of our claims reps on the disability side were remote, what we found was a lot more mental anguish and mental health challenges because they were isolated, dealing with these very difficult emotional problems on claims on disability. And we found that when they're in the office together, that support network that being with other people actually gave them. And so I think it can play a great role in talent. This is such a great industry for me, because, again, from a technical modeling, math, numbers, data, it's such a great, if you're intellectually curious, if you like massive amounts of information, and the social good that our industry serves, both to individuals, communities, businesses, and then the entire economy is so terrific that we shouldn't have any problem getting anybody in this industry. So that's...
Julie?
I would add, I completely agree. You know, it's an interesting question because I think that there are some functions at the insurance company that might benefit from ChatGPT or AI. I mean, I do know that ChatGPT passed a bar examination, but I don't think we're about to replace my team of attorneys at all because of that analysis factor. You know, the ability to advise the business on what they're considering and maybe the path to compliance rather than a straight yes, no, that doesn't comply with, a statute in Idaho or Nevada or something like that. Additionally, I do think that there is the opportunity to use machine learning, AI, to look at a lot of the data that we possess, but I think that the regulators are going to expect that we understand that data and how it's being used and be able to explain that. And so that, again, more critical thinking analysis, I don't see the role for AI yet.
Okay. Did you have a...
Yes.
Yeah, okay.
So,
I figured you did.
I think when I return to Bermuda next week, we have 5 interns starting, Bermudians starting, in our legal and regulatory and compliance department alone. I don't know how many total at the company. I've been trying to come up with projects for the 5 that are starting on Monday. But I think that this shows a dedication of our company to develop talent. These people will be showing up every day to the organization, and while I think it is great that we have advancements in technology that can help us process data more efficiently and work quickly, I think it's also important for our organizations to spend time with young up-and-coming underwriters, risk modelers, insurance, because the talent's not just going to appear. You have to invest the time and the human resources in these people in order to develop the talent. They can't sit in a room and learn from ChatGPT everything that we all know from being in the industry for 30 or 100 years. Not that you're 160.
You personally.
So I think that, again, yes, we all learned during the pandemic how to work outside the office and at home, but I think we also recognize as leaders of our companies the importance of mentoring and building talent and building a pipeline of future leaders. And I'm proud of the work that we are getting ready to start this summer with our young Bermudians, and I hope and encourage your organizations to do the same.
I think if I could just add, I think AI, as we've used some of it in particular for large data sets to look at trends or things that a human brain would never be able to absorb, can be quite powerful. And so when it comes to, for instance, claims fraud in the dental business, for instance, we look for anomalies of patterns in where fraudulent claims are coming through. Our claims adjusters on the dental side could have never seen that pattern because the data set is just way too massive. I think, as Julie mentioned also, as it comes to the different regulations around the different jurisdictions, it's hard for people to know every single state's jurisdiction. And I think, so AI can be a great, right now, a great complement to what we're doing in being able to see things much larger or lots of different data and differences and variabilities in data to piece it together and be more effective and hopefully efficient as a company.
Sounds great. I'm going to ask one question of you, and then I'll go back and do the round robin. For Shannon, what is RenRe seeing in terms of future pandemic risk? Are we likely to see another COVID-like pandemic event in the next decade?
Well, I'm not a scientist, I'm a lawyer. I think that what we've all learned in the past 4 years is never say never. So again, we at RenRe are trying to protect the future, and as with most of the organizations here today, we're in the business of protection. So while I don't think we have any secret or special knowledge or insight into that area, I think what we are doing is building systems to protect against the next one. And again, understanding wordings, getting better at conversations with our clients and customers so that when it comes, there's less uncertainty. I think that the good thing, if you could call it a good thing, about the turmoil that things like war and pandemics create is it does increase the need for insurance and reinsurance. I think because when there is panic or turmoil, insurance is a way of minimizing that risk, and we provide the ability to reduce volatility and minimize risk. That's our business.
Okay. All right, this is the closing, because we only have about 5 minutes or so left. This is the closing question. I will start with Julie and work our way back. To connect back to where we started, how do you envision the insurance sector evolving over the next decade? And do you think the issues that we've discussed here is sort of just all-encompassing, or are there new issues on the horizon?
You know, I think that the issues that we have discussed here today are certainly paramount in all of the minds of the executive management at insurers today. The use of AI, data, predictive modeling, certainly talent and catastrophic risk. I will tell you, we spend a lot of time, scenario planning, stress testing, and we aren't actually, preparing for the next pandemic, but we're watching very closely, something as timely, I guess, as the credit default risk of the United States. Not only because we have a bank, but because we have a substantial number of our members that are paid by the federal government. And so that will affect our insurance businesses as well. So there are a lot of different environmental factors that I think insurers are going to need to continue to stress test, to model, to scenario, do tabletop exercises to be prepared, because I don't know that the next big thing for our industry is going to be a pandemic, and we kind of have a playbook for that now. Also recession and inflationary environments, but it's going to be something that none of us have probably thought of yet. So that very strict and disciplined risk governance modeling, I think, is going to be paramount for the insurance industry of the future.
Thank you. Andrew?
Yeah, I absolutely agree with what Julie just said on that, on the undercore managing of an insurance company. What I envision in the next 10 years for us is, if you can close your eyes and think about what would the most contemporary modern experience be for consumers, and I think we can achieve that in the next several years. And I think it's a different set of processes. It's a different use of data. It's a different service model. It's a different engagement model with policyholders over time. But I think that's on the consumer side. I think that's going to change dramatically in the next several years.
Thank you. Shannon?
So I think one of the things that's going to change over the next several years, and again, we get back to the data. I think the more data we have and the faster we can process it, the more efficient we can be. And that goes for reinsurers and insurers. And I think that we are uniquely positioned to start digesting some of that data and not repeat past mistakes, especially on the climate front. We recently partnered with Moody's, where we are using some of their analytics to be able to sort of score, if you will, the underlying carbon footprint of our portfolios. And I think that doing things like that will help us to do, for instance, provide better pricing for people with a better score, or at least educate the underlying insurance companies about what they are insuring. And again, it's using data, this is just one example, using data to help build more awareness, and that facilitates transition. And again, no matter whether you're on the pro ESG or anti-G spectrum, knowledge is always good. And again, transitioning with use of data is a good thing.
Thank you. I want to you all to congratulate and thank our panel members today, and I appreciate your engagement.
Thank you.